the moment, and that needs to remember they've been on a break for a week and they come back to market. I think it's tomorrow. So it's going to be fascinating how they trade on this, whether they're going to see counter moves from China, whether they're going to be aggressive, or they really step over the mark and say, right, if you're going to play 25%, we're going to really significantly change our footprint as far as counter moves. So again, we're just sitting here waiting, digesting, but appreciating what's going on.
Yeah, and investors like Clarity, companies like Clarity too, is there enough detail that's been rolled out from the US as to which exact goods are going to be affected and how it's all going to be rolled out?
Still a little bit, it's not a clear vision at the moment, and this is the issue, how this is going to be, I think, interpreted by the market over the next 48 hours. Some sectors are back at 10%, as you mentioned, for energy. Some are going to be 25%, and then some are going to be exempt. So it's just wait and see where it really the sand lies midweek, and then we'll get a clearer picture. But at the moment, you've got to say that it's had an impact to the markets. Energy prices are well up, and you've seen the US dollar continue to strengthen significantly this morning.
As you mentioned, the US has also imposed a reduced duty of 10% on Canadian oil imports. America gets almost all of its oil imports from its northern neighbor, and analysts say the increased cost will likely translate to surging prices at the pump. Mukesh Sadev of Rystad Energy agrees with that sentiment, telling me the consumers can definitely expect higher prices if this continues into the summer.
I think this is an interesting dynamics at play. And as Trump put these tariffs, I think a lot of countries, Canada and Mexico, are trying to figure out what's the plan B or the plan C. I believe Trump has a plan B. And the key question is OPEC Plus and the OPEC members Trump's plan B, while the flows from the north, which is Canada, and south from Mexico get reduced to some extent in the short term. Can OPEC Plus go ahead and bring some barrels back and give the crude to the U.S.?
And in the short term, should consumers be expecting higher prices at the pump?
Absolutely. I think the key question to ask is that in the short term, where we are not in the summer peak demand, and when the summer season comes, then we will really face the impact because then U.S. has to attract the barrels from either Europe. Also, there is a possibility that, a little less known fact maybe that U.S. is sending quite a lot of products to Mexico, almost 700, 800 kilo barrels per day, not a small number. U.S. might have to retain those barrels home if they have to tackle the prices. So I guess that Canada with crude, more integration on products with the Mexico borders. So it's quite a complex, and I believe if it lasts into beyond a quarter into the summer season, then there will be really price impacts. Short term, I think the supply chains will try to adjust.
Tax breaks for India's struggling middle class was the big headline from the finance minister's annual budget presentation on Saturday. She was outlining the government's spending priorities ahead for the year ahead. The BBC's Arunaday Mukherjee has more on what this means for Asia's third largest economy.
India's middle class is expected to have a little more money in their pockets thanks to the tax breaks announced by the Indian government. From now, those earning around $15,000 annually will not have to pay any tax. That's an increase from the earlier income threshold of around $8,000. The finance minister has also made tweaks to other income tax slabs as well. Inflation and stagnant wages have meant people have been more careful about how much they spend, and these tax breaks should help. Meanwhile, capital expenditure, or CapEx, which is the amount a government spends on big infrastructure projects like roads, highways and ports, well, that seems to be on track, with the government outlining around $120 billion for the same. It's been a major driver of India's economic growth over the last few years and also helps create jobs. While the government has also outlined skill development programs to help make people more employable, the jury is still out on how successful that will be in boosting employment.
In a country like India, whatever you may do, it may sort of seem as, inadequate, given the size of the population that you're trying to address. These skilling programs and, the overall larger internship programs that were also announced last year, they're taking shape as we speak right now. So, maybe a year down the line, we'll be better equipped to say whether something is being done enough. Expenditure has been allocated, but let's see the performance on those fronts.
The budget also focused on agriculture, the sector that employs over half of India's population. Looking to boost output, low productivity areas will be identified and farmer credit limits increased from $3,500 to over $5,500. But experts also say, given the global headwinds and the looming threats of tariff hikes from a Trump presidency, that means the economic uncertainties in the short to long term for India will remain.
The author of the Elon Musk biography has said that the CEO of Tesla will go too far when it comes to the conflicts of interest between his business empire and his role within the US government. Walter Isaacson has told the BBC that while Elon Musk has extraordinary power to influence US President Donald Trump, he only sees the bromance lasting around a year. Here's more from his conversation with the BBC's Ritika Gupta.
It cuts both ways. I mean, he's not on the Tesla assembly lines fixing things the way he would have been 2 years ago. In my book, I show exactly how he has an algorithm so that he can manufacture 1 million electric vehicles when General Motors can do basically none. And so you pull him away from that. On the other hand, by being in the administration, whether it's the National Highway Safety Board or the other regulatory agencies, he gets the barrel forward. I think people are valuing the company partly as a tech stock, which is what it is. It's going to be a stock that involves AI, robotics, and self-driving cars.
But can the richest man in the world avoid such big conflicts of interest from his business empire to heading up Doge and being the charge of cutting government spending?
No, I don't think that if you had to list the traits that Elon Musk has, accepting limits would not be in the top 10,000. He's going to push limits. He's going to break limits. And as I say, it's going to cause some problems, but it's also going to get certain things done. We sometimes had been a nation of risk takers, and we became nations with more referees than risk takers, more guardrail builders than risk takers. And maybe it'll be interesting. I think he will go too far. He thinks he will go too far because he always says if you haven't gone too far and then have to scale back, it means you haven't tried hard enough. So it's going to reverse this notion of we have a whole lot of guardrails and conflict rails.
And Elon Musk and Donald Trump, they're such big personalities. So do you see this relationship enduring, or do you see a fallout down the line? And what kind of issues do you think that they may clash over, or personality traits that may lead to that?
Well, we see that Musk already pushes the limits, and Musk has never proven in 30 years that he can work for somebody. So Musk is not going to just be a puppet for Donald Trump. And Donald Trump has never shown a real willingness to share the limelight. So this is not exactly the most stable of molecules. But I guess if I had to predict, it's going to last for about a year because they both kind of have bonded in this strong way. And they both need each other because Trump really does, as we've seen, for better or worse, want to blow up much of the bureaucratic state in the United States.
Yes, and President Trump is already shaking up the trading world with those introduction of tariffs for Mexico, Canada and China set to take effect on Tuesday. We've got a live page up and running with lots of detailed analysis of what it could mean going forward for all the countries involved and for consumers as well. Thanks for your company here on Business Today. We'll see you again soon.
I define populism as exploiting a grievance rather than solving it, as riding the anger rather than providing the answer.
Whatever time of night, Dave, couldn't sleep at night, you'd go in the studio and you'd just create music, put something down if you had an idea.
I think every athlete goes through their end of their career in a very different way.
When big names talk, they talk to us. In nearly 20 years of being a journalist, I think one thing I can say which is true of this region is that it's become much harder to be a journalist. There's barely any journalism in here holding the government to account. It's really important to be on the ground, and if that means you've got to go to hostile, remote places, then we have to do that. That's the opium resin. There's a very pungent smell of it in the air right now. The Delta wave of COVID devastated India, and I think it was the coverage that we did for the BBC at the time which brought international attention. What's happening here could affect the world's ability to recover from the pandemic. When I'm reporting from a region or a country where women's rights are being eroded, what we're most focused on is ensuring that there is a spotlight on that story. Should women be educated or not? We've met with families who've had to do the unthinkable. Another person came up and asked if we'd like to buy their child. The desperation is hard to put in words. It's really important that we tell the story in a sensitive way and maintain the dignity of the people who are talking to us. Many of the stories we've had to tell are distressing, they're difficult, but that's usually an indicator that they're really important stories to tell.
After 15 months of war and massive death and trauma on both sides, Israel and Hamas have reached a ceasefire deal to release the hostages and allow displaced Gazans to return home. Will it hold? And can Israelis and Palestinians recover and rebuild? Stay with us here on BBC News.
For the latest news on the Middle East conflict, turn to the Global News podcast. For clarity on the day's headlines, interviews and analysis with experts on the region, and answers to the questions you have. Listen to the Global News podcast wherever you get your BBC podcasts.
Donald Trump is back in the White House and he's already pressuring Russia to end its invasion of Ukraine. But will Moscow even listen with it seizing more and more land? Here in Ukraine, people are worried about their futures and the terms of any potential peace deal. I'm James Waterhouse and you can follow the story here on BBC News.
When the weather can't make up its mind, we can help you make up yours. Check on BBC Weather.
This is BBC News with the latest news and results from around the globe in Sports Day.
Hello and welcome to Sports Day. I'm Lizzie Groomer-Hughes. Here's what's coming up on the show. There's another thrashing in Mumbai as Abhishek Sharma helps India inflict England's worst T20 defeat. And the Flying Dutchman does it again. Mathieu van der Poel wins a 7th World Cyclocross title. Hello and welcome to the programme. We're starting with football and a fascinating day in the Premier League, including at Arsenal, where they stunned the reigning champions Manchester City, thrashing them 5-1 to close in on leaders Liverpool. Arsenal were ahead inside 2 minutes from...
Considering the opposition that we just played, to get the result that we got in the manner that we got, it makes it very, very special. And a lot of things have to go your way, because I think we started really well, scored the goal, means a big chance, and afterwards, yeah, they are so good that they force you to be deeper and to be in situations that you don't want to be. And after that, you need sometimes a bit of luck.
Only I regret the last 20-25 minutes that we forgot to do what we should do, what we have done during 60, 65, 70 minutes. So Of course, it's a difficult game. Starting the stadium against that team in the first minutes and happened many times this season. The rest was a really good game for our side. It's difficult to understand when you see the result, but this is my feeling.
Tottenham ended a 4-match losing run in the league with a much-needed 2-0 win at Brentford. An own goal and a late goal from Pape Sarr gave an injury-hit Spurs a crucial 3 points. Their first Premier League win of 2025, and it puts them up to 14th in the table, while Brentford stay 11th.
Yeah, we need that today. Again, playing Thursday, Sunday with the same group of players is not easy. Coming here is not easy. They're a hard team to play against, and they score a lot of goals at home. So, and the way they play, they make you defend whether you want to or not, because they get a lot of balls in the box, whether that's set pieces, throw-ins, crosses, and I just thought the lads handled it awfully well. You know, they got first contact when we needed. If we weren't getting first contact, we were challenging all the time. And then we had the quality of our football to hurt them the other way. So, yeah, super effort by them. Like I said, I'm really proud of the players.
Well, it was another bad day for Manchester United fans at Old Trafford as they lost 2-0 to Crystal Palace.
A hard season in this moment, a hard moment because we are trying, and you feel it. The players are trying. We try different things to control the game, to improve certain things from the last game, and you feel it. But then when you don't win games and you are in that roller coaster of results, of momentum, it's hard, especially at home. But we need to move forward and to think about the next game.
Defended really well today. We struggled in some moments at the beginning and also straight after halftime. We, especially that too many set plays, and we defended well, but they got many second balls and they had a big chance straight after halftime. And on the opposite, we scored from a set play. But overall, I think the players, and this we were talking at halftime, we had 2-3 big chances in the first half as well, and we said, okay, these situations will happen again. Just be patient, stay in the structure, always keep the belief.
Well, staying with Manchester United, and Marcus Rashford is now officially an Aston Villa player for the rest of this season at least. The England forward has moved to Villa on loan after being frozen out by United. He scored 7 goals for them so far this season, but he hasn't played for United since being dropped by head coach Ruben Amorim back in December. Now, it's been a good day for the top 2 teams in Scotland. Leaders Celtic won 2-1 at Motherwell, scoring in the first minute of play, whilst Rangers thumped Ross County 4-0 at home. Celtic are 10 points ahead of Rangers with a game in hand. It's also been an exciting day in the Women's Super League. 6 matches and plenty of action. The early game between Manchester City and Arsenal was a 7-goal thriller, which went the way of Arsenal. Everton thrashed Leicester. Leaders Chelsea continue their impressive season with a tight win over Aston Villa. And the late game between Tottenham and Manchester United went to Manchester United. Now, it was the Milan derby in Serie A, where Inter came from a goal down to salvage a 1-1 draw. Tiani Regners puts AC Milan ahead on the stroke of half-time after Inter had 2 goals disallowed for offside. And it looked like they'd won it until Stefan van der Vrij scored the equaliser in the 93rd minute. It was a huge match, though, for the former Manchester City captain Kyle Walker to make his debut for AC Milan, and with England manager Thomas Tuchel watching in the stands. Cricket now, and England have suffered their worst T20 defeat as they were beaten by India in the final match of the series. They'd already lost the series, but they were thrashed in Mumbai, first by India's batting, which totaled 247 for 9, including 135 runs scored by Abhishek Sharma off 54 balls. That's the highest T20 score ever by an Indian batter. Well, in reply, England were beaten by their bowlers as well. They crumbled. They were bowled out for just 97 in half their overs, losing by a record 150 runs and losing the series 4-1.
They played a fantastic batting innings. I've played quite a lot of cricket, and I think credit to Abhishek Sharma. I thought that's as clean a ball striking as I've seen. I thought he played fantastically well. You know, we always sit down and think, what more could we have done, or how we could have stopped him. But some days I think, you know, you have to give a lot of credit to the opposition. I thought he played brilliantly well. Credit to us for, you know, sticking in there and fighting back and you know, keeping them down to 240 after the start they got. But yeah, I think with the bat, you know, I've played in a few games like this, and it generally goes one of two ways. You either get actually somewhere near, or you fall in a heap, and today was that day. The way Phil Salt went out there and struck the ball, it was obviously a really good wicket. He needed someone to go with him, and one or two guys to catch fire, and that's the way you're going to chase that down. Like I say, you either get quite close in games like this and surprise yourselves, or it doesn't work. But no, we certainly won't change the way we want to play. We need to keep backing that, be even more committed, and obviously you're desperate to do well and execute that.
Well, it's been a couple of poor days for England. Their women's team were whitewashed by Australia in the Ashes. The managing director of England's women's cricket, Claire Connor, described their performance as brutal, hugely disappointing and frustrating, but she doesn't feel the accusations of a lack of professionalism are accurate.
The perception and reputation of England women's cricket is something that we want people to see this team positively, and for them to be role models and to inspire fans and boys and girls to follow the team and to play cricket and follow cricket. This group of players care deeply about playing for England. They are hurting hugely from what's happened over this last month. So there isn't a lack of professionalism. There is learning. Of course there's learning that we've got to do, and as I've mentioned, we've got to do it quickly.
Now, the English golfer Laurie Cantor has won the Bahrain Championship, his second DP World Tour career title. He won it in a playoff between compatriot Dan Brown and Spain's Pablo Larrazabal, who bogeyed the 18th, which forced the playoff with the three players all on 14 under. Well, Cantor took full advantage at the first extra hole. Here he is tapping in a birdie to take the title.
Going to do everything I can to try and get myself in that top 50 and open up the opportunities that brings. I'm not that far off it now, and it's great to have a target like that. We got a lot to play for out here with the PGA Tour, kind of carrot at the end of the year, but actually there's so many things during the season that you can play your way into, and I'm just personally very motivated to do that at the moment.
Now, there was a magnificent 7 wins for Mathieu van der Poel in the World Cyclocross Championship in France. His main rival, Belgian Wout van Aert, crashed on the first lap while trying to close the gap on the Dutchman. Van der Poel's 7 world titles equals the record set over 50 years ago in the men's elite races. And next year, he could go one better on home turf in the Netherlands. Cyclocross, in case you wanted to know, is a unique discipline best described as a cross between road cycling, mountain biking and steeplechase.
The race was super hard, also technical. It became harder and harder to find the right ruts to get into as well. Also, the sun was getting lower, so it was super tricky conditions. I think a lot of riders struggled to get in the pedals as well, so it was just super difficult.
Well, meanwhile, Britain's Zoe Baxted recovered from a crash on the opening lap to retain her women's under-23 cyclocross world title in France. She won the race by 39 seconds ahead of Marie Schreiber. That's it for me. As always, there's much more on the BBC Sport website, but for me and the Sports Day team, from all of us here, it's goodbye.
Hello there. Let's take a brief look now at the world weather forecast for the next day or so. And we'll begin in North America, where still there's that atmospheric river just feeding more heavy rain into southern parts of Oregon, northern California. This will lead to heavy snow over the mountains. Of course, that's set to continue for the next couple of days or so. Meanwhile, some more snow and some strong winds across many central parts of Canada, gradually drifting further southwards and eastwards on that clipper. Very cold air across Canada, very warm air though, particularly for Texas further south across the states. Into Central America, it's the usual mix of sunshine and showers for the Caribbean as well. Some heavy showers developing, a pressure effect. affecting parts of southern Italy, bringing showers here gradually pushing eastwards into Greece and the Balkans. Meanwhile, across North Africa, we're affected by that low in the Mediterranean, bringing some showers across Algeria and Tunisia. Eventually, colder feeling conditions will develop across pretty much the whole of North Africa, including Egypt, as we head through the next couple of days. And across Madagascar, a tropical storm gradually pushing further westwards will bring some heavy rain to the area. Meanwhile, across the Middle East, we'll see strong winds develop coming in from the south and the east. That will help to drop the temperatures somewhat. And across India, the usual issues with fog persist across the north and across some of these eastern states too, such as Odisha. Some thunderstorms further north still across the Himalayas, warnings in place for those. Now for Japan, we're seeing more snow showers being brought down on that northerly wind. Temperatures by day only -5 degrees Celsius in Seoul. Temperatures about to drop significantly too in Beijing. For much of China, it is largely dry. Some heavy showers affecting parts of Vietnam, and across the Philippines there will be some enhanced rainfall too. So the Philippine Met Service monitoring that area for possible tropical cyclone development. Meanwhile, there's been some very heavy rain across northern areas of Queensland, leading to some flooding and some landslides too. That rain expected to continue. New Zealand fairly quiet at the moment and is set to stay that way too. Bye-bye for now.
I am going to lecture you on climate change.
Have you considered resigning over this? Because you're clearly embarrassed.
Of course, I have been, I have thought about this.
I want to be totally honest.
Us can actually make our own judgments. Oh, I love what I do. I can't imagine doing anything else.
Good morning, you're live on CNBC. Dan Murphy with you in Dubai. This is Capital Connection. Let's get straight to your headlines this morning. First today, trade war 2.0. Stock sell-off and the US dollar rallies as President Trump slaps tariffs on Canada, Mexico and China and says there's more to come. Canada and Mexico respond with retaliatory tariffs on US imports. Meanwhile, China says it will seek countermeasures and challenge Trump's moves at the WTO. European stock futures are also moving lower as Trump puts the EU in his crosshairs. The president saying tariffs on the bloc will definitely happen, but stopping short of giving a timeline. And oil prices also moving higher on fears of a supply disruption from those tariffs, but concerns about the longer-term demand outlook are keeping a lid on the gains. Good morning. Welcome again to the program. Trump's tariff tango in play. Global stocks falling here. The US dollar surging with Trump hitting Mexico, Canada and China with new tariff measures. Regional investors now working to assess the impact on global trade and inflation, and of course if these measures will even hold. Taiwan and Hong Kong markets returning to trade, but China is still out of play for the Lunar New Year. Here's where we stand with the open active markets right now. The Nikkei 225 down almost 3% as we speak. We're seeing significant losses for the Kospi as well, down 2.8. Stocks in Singapore and in Jakarta and in Australia all pulling lower off the back of this. Let's give you a live update on what's happening with US equity futures as well as we track into the resumption of Wall Street trade. We could see selling continue when trading gets back underway in the United States. As you can see, the Nasdaq called lower by 576 points right now. The Dow off by 680, the S&P 500 down 125. So we're seeing significant losses on the US equity futures picture here. Let's see what happens when Wall Street comes back to life. The dollar also moving here, and this has been one of the most interesting reactions that we've seen so far to these tariff measures. Right now, dollar index sub 110 at 109.76. You can see 1.3% stronger as we speak, and that is of course hitting the FX landscape right now. Treasury yields also in focus, and what we see here is the curve moving off the back of these tariffs as well. The 10-year at 4.51%, at the short end of the 2-year at 4.24% as well. And of course, as I mentioned, because we are seeing that stronger USD, the Canadian dollar and the Mexican peso have been sliding sharply here. Right now, CAD at 1.47, the peso at 21.2510 off the back. So you can see losses in the order of 2.8 and 1.54% respectively. President Trump, what has he done? Well, he's delivered on his promise to impose tariffs on the US major trading partners. It's 25% on Canadian and Mexican goods and an additional 10% on Chinese imports. The tariffs are set to take effect at 12:01 a.m. Eastern Time on Tuesday. According to analysts at ING, they would cover nearly half of all US imports and require US manufacturing output to more than double. Trump invoking the National Emergency Acts he declared to impose the tariffs, saying they are needed to curb two things. The first is illegal immigration and the second is narcotics, including fentanyl. In a post on his Truth Social, he acknowledged there would be some pain for Americans, but it would be worth the price. Trump will be speaking with the leaders of Canada and Mexico later today, though it's unclear how much of all of this could potentially change. In response, Canada announcing 25% retaliatory tariffs on over $150 billion worth of US goods, including peanut butter, lumber and alcohol. It will also seek legal recourse. It also urged a boycott of American goods and buy Canadian instead. Prime Minister Justin Trudeau saying while Trump's tariffs would be felt in Canada, it went far beyond that. He had this message for the American people.
It will have real consequences for you, the American people. As I have consistently said, tariffs against Canada will put your jobs at risk, potentially shutting down American auto assembly plants and other manufacturing facilities. They will raise costs for you, including food at the grocery store, gas at the pump. They will impede your access to an affordable supply of vital goods crucial for U.S. security, such as nickel, potash, uranium, steel, and aluminum. They will violate the free trade agreement that the President and I, along with our Mexican partner, negotiated and signed a few years ago.
Justin Trudeau there. Meanwhile, Mexico also ordering retaliatory tariffs, with more details set to come later today. President Claudia Sheinbaum urging for dialogue, as she also echoed Trudeau's warning that tariffs would hit U.S. consumers.
This measure of 25% tariffs has effects for both countries, but it has very serious effects for the economy of the United States, as it's going to greatly increase the cost of all products that are exported from Mexico to the United States. It's going to have 25% more cost.
And I flag for you what US equity futures are doing right now. Heavy losses. Well, here's the picture in Europe. The Euro Stoxx futures also down sharply here on fears the EU could be next in line. Trump also warning the bloc that tariffs are on the way. Listen.
It will definitely happen with the European Union, I can tell you that, because they've really taken advantage of us. And, you know, we have over a $300 billion deficit. They don't take our cars. They don't take our farm products. They take almost nothing. And we take everything from them. Millions of cars, tremendous amounts of food and farm products. So the UK is way out of line, and we'll see the UK, but European Union is really out of line. UK is out of line, but I'm sure that one, I think that one can be worked out. But the European Union it's an atrocity, what they've done.
President Trump there. Meanwhile, it is game on. China now weighing its own moves against those Trump tariffs. Live now to our Sam Vardas, who joins us for Singapore for more on this. She's been across the story all morning. Sam, China, of course, no stranger to tit for tat. So where does this trade showdown go next?
Yeah, well, here we go again, Dan. G'day to you. We've heard a reaction from the Chinese officials. Of course, no reaction from the markets today. We are closed until Wednesday for the Chinese New Year. But the official reaction from the Commerce Ministry has been one that we are vowing countermeasures. However, they are unspecified at this stage. They have said that they would protect their rights and interests. Once again, a fairly restrained response as far as the market is concerned. They've said that they will file a lawsuit with the WTO, but once again, that has no major material material impact on US trade. That is largely symbolic, and the view is that this is China basically taking the moral high ground here, that it just follows the rules, and so this is largely about the messaging. We know that China is likely to use the Chinese currency as a shock absorber, not getting much of a indication of how much just yet, because the PBOC, of course, is on holidays too. We're not getting that onshore fixing each morning. The expectation from the FX strategist I've spoken today is that they're likely to defend that 7.3 or so level. So we'll wait to see on Wednesday. But for now, in the offshore currency, we've actually come off the lows, 0.3%, 34.27, 34.20, I should say. So things don't look too bad there. But of course, we are going to be waiting to see how much they can do as far as negotiating on this, because this is down to fentanyl. And remembering the 10% tariffs is on top of the average 19% that China already faces. So let's see what happens when the Chinese markets come back online on Wednesday. But one market that did come back online is Taiwan and Hong Kong. And Emily has been watching the reaction all morning for us. Break it down for us.
Thanks a lot, Sam. And let's start with the Hong Kong market. And we are seeing quite a bit of weakness, playing catch up today, down 1.1%, 19,992. Let's look at our heavyweight stocks, because you could see one bright spot here, and that is Alibaba. Just a quick mention of HSBC and the banks, though, because they have all kept their rates unchanged. Lots happening in the days that the market was shut. Of course, we had a rate decision, and the banks move in lockstep because of the dollar peg. So HSBC, Bank of China, and Stanchart all keeping their prime lending rate unchanged. Now to Alibaba, and we're up 5%. What does this have to do with? Maybe it's Qwen 2.5, its AI model that launched on day one of the Chinese New Year. I'm talking about last Wednesday, and it claims to outperform GPT 4.0, DeepSeek, Llama, Claude, as well as Gemini. And that, of course, with the AI on edge, we're seeing people run their AI models on PCs. That's helping to lift some of the PC stocks. Let's look at Lenovo. Let's look at Tektronix on the impact from the Trump tariffs coming through on China, 10%. If we can bring up that board, please. We are looking at upside across the board. Lenovo shares of 4.2, ASUS and Acer traded in the Taiwan market, given the huge downdraft we're seeing in Taiwan. Flip over to the TAIEX. We're seeing a pullback of 3.5%, and this is to do with TSMC and Han High Precision. Now, this is on the worries about Trump tariffing the chips from Taiwan. Let's flip over to the heavyweight stocks. I'll show you the damage before I move on. It was really bad for TSMC shares coming off the all-time record high. TSMC shares pulling back 6.2%. Han High down 7.2, now 8%. It closes up shop in about 20 minutes from now at 1:30 local time. Let's now get a check on what's happening, the reaction in Japan. Lots of downside, Lynn, over on your market.
Yeah, absolutely. And we're seeing heavy selling pressure, which is actually deepening into the afternoon session. We're more than 1,100 points off for the benchmark Nikkei 225. And the key market story here is the sell-off in terms of the automakers, which is the biggest export market for Japan as well. It is really the names that have the most exposure to production facilities, particularly in Mexico, to a lesser extent in Canada as well. Toyota, Nissan, Mazda and Honda have been selling off the most. Also parts makers like Denso and Ising as well. If we take Toyota, the heavyweight on the topics as well, it produces the Tacoma pickup trucks in 2 locations in Mexico. And if we take the numbers for 2023, 230,000 of those vehicles sold as well. So the focus really now is on the earnings, because we'll get Toyota, Honda and Mazda reporting this week, and what the companies might say in terms of how to circumvent these tariffs as well. And certainly a lot of focus also going to be on Shigeru Ishiba, Japan's Prime Minister's reported meeting, which should happen with Donald Trump on Friday as well, how to perhaps ward off those direct tariffs. Let's head over now to Sherry Kang, who is watching the reaction in terms of those tariffs on the South Korean markets as well. Hey, Sherry.
Thank you very much, Lynn. And of course, very bad reaction to Trump tariffs. And we've got a lot of Mexico exposure for South Korea's electronics giants, such as LG Electronics and Samsung, and Canada exposure for the battery as well as battery materials sector. So they are hurting. And we've got a lot of heavyweights looking very badly wounded on a day like this. And we've got, of course, the Kospi erasing a lot of its year-to-date gain. Now it's up just about 2% so far this year. There is no recovery when it comes to the semi-names either after the deep sell-off on the back of the DeepSeek breakthrough that South Korea got to digest on Friday. We've got SK Hynix giving up 4.5% at the moment. And staying in this space, we've got the Samsung Electronics chairman J.Y. Lee. The court ruling should have started about 10 minutes ago, and the prosecutors are seeking 5-year jail term against him. We're talking about, of course, accounting fraud and stock manipulation allegations at this point regarding 2015 Samsung affiliates merger. The stock is down 2.6%. Dan, it's back to you.
Sherry, thanks for the update, and thanks all for the pulse check on what's moving in Asia. Let's get you some more insight and analysis on the state of play. David Roche is here. He's a strategist at Quantum Strategy. David, good morning to you. Should we necessarily be surprised by what has just unfolded here? Trump has done exactly what he said he would do. He's delivering on both the political and economic promise here.
Look, we shouldn't be surprised. We knew it was coming, but most of the big banks and the big brokers have been telling us that, it's just a negotiating tool, because he didn't mention really tariffs specifically at the inauguration. It meant he's gone soft on tariffs and he'll be pragmatic. He will not be pragmatic. Tariffs are a part of every policy in Trump's mind. That includes economics, it includes drug trafficking, it includes foreign policy. At the moment, we've only seen the drug trafficking and immigration questions being dealt with by tariffs. It'll be a lot more. It's going to be much more when it comes to economics. Then we really get down to business.
Let's also take another look at U.S. equity futures right now as well. And David, I want your reaction to this, because what we're seeing right now is Dow futures called down by almost 700 points. We're going to see heavy losses when Wall Street trade gets back underway. And on your screen right now is Trump's favorite measure of success. This is the metric that he uses to determine how he is performing stateside. When markets go up, Trump's happy. When markets go down, he's not happy. So the question is, if we saw heavy losses on Wall Street, is it realistic to actually expect these tariffs will hold? Trump could change his mind at any time.
No, because Trump doesn't learn. He doesn't learn that this is telling him that the U.S. economy is going to go down by at least 1% as a result of this tariffs, that inflation is going to go up by at least 0.8%, and that these tariffs are actually a $1,000 per year tax on households. He doesn't learn this sort of stuff. So he's going to go on and say that the market is simply a temporary effect, that it's the result of people conspiring against him, blah, blah, blah. But you're not going to see a change in track, because he's tracking towards economic tariffs, foreign policy tariffs, tariffs for everything, including the common cold.
So let's take a step back here and assess the overall impact. You mentioned it could be significantly inflationary for domestic U.S. How else do you see supply chain dynamics and the economic translation of these tariffs ultimately moving here under Trade War II?
Well, it takes a long time to move a factory, and very often you don't have the skills to actually recreate that factory as it was, say, in Canada or in China. So I think that is really a mismatch between time one and time two. Time one is you kill the economy. Time two is you hope that somebody will bring back a factory that will make those things. Now, when I look at the economy, I see a lot of inflation coming from these tariffs. For example, I'll give you a hard example. Canada supplies approximately 24% of the crude input to U.S. refineries in areas which aren't easy to substitute another source of supply. Canada, the increase in gas prices, for example, not gasoline, but gas, natural gas prices as a result of these tariffs will be 8%. That's going to hit everybody. It's going to hit electricity. And then you come to computer electronics. That's going to be 6%. In effect, if you look at these tariffs, they are twice as big as all the tariffs that Trump imposed during his first term of office. And those tariffs were implemented over 2 years. These are happening now. So the exogenous shock to the economy is much greater. And that's what markets are going to tell you about.
Right. David, can I also ask you about the impact for China as well? Clearly in Trump's crosshairs, and also a delicate balancing act for President Xi here. There's a real risk, of course, that these tariffs could exacerbate the already significant downside pressures on China's economy. So what's your expectation of the impact, and how will Xi respond?
The official, not official government, but the official figures coming out from state-controlled banks and researchers is that these tariffs don't matter to China. And that's rubbish, of course. It's going to say, the first thing it's going to hit is confidence, because the Chinese, like everybody else, thought that Trump was just for negotiating, when he's not. This is an ideological move on a subject in which he thinks he holds the Holy Grail. So, bottom line, this will knock between 0.3 and 0.5% of China's growth. If the tariffs go to 20% when he gets down to dealing with economic imbalances between the US and China, then you're looking at 1%. You may think, well, that doesn't sound like a lot. Well, it does sound, is a lot. That's about 1/5 of China's total growth in a year, which is, of course, overstated. So I think it brings China ultimately very close to the point of a recession, which may not show up in the statistics, but they'll show up in people's feelings and in their minds.
Okay, so China potentially heading for recession as a result of this. David, that's a big call. We're going to unpack this a little bit further, but before I let you go, I also want your quick take on the Europe angle here as well. You heard President Trump speaking earlier, saying Europe also in the crosshairs. What is the potential scope of tariffs on the bloc, and what might this look like?
I think Trump hates Europe. I mean, this is not about economics. It's about some vitriol which is inside him. So he hates Europe. And the result of that is that he is going to put at least 15, maybe 20% tariffs on most European goods. Now, oddly enough, America's sales, exports to Europe are up 17% since 2020. Of course, there is still a deficit, but that's because, you know, things like American cars, when they are sold in Europe, they're made in Europe. Seems to escape the president's attention, as many things which are vital to this argument do. But I think the issue on Europe is it will extend into foreign policy. It will extend into Europe's regulation of the internet and all sorts of things like that. These will all be mixed up and whacked. So I think the news on Europe is going to be very bad. And where you really get a spillover effect is how then does Europe cooperate with Trump on questions which are very vital, like Russia's aggression and on Ukraine. So this is not just economics.
Indeed. David, we'll leave it there, but stay with us because we are going to squeeze in a quick break. When we come back, we'll continue the conversation on the market impact of these Trump tariffs, Asian stocks sliding, US equity futures in free fall after these new tariff measures against Mexico, Canada and China. Stay with us. We're back in 2 minutes.
Good money.
Everything seemed legit until it wasn't.
Good times.
The lavish lifestyle, the houses that they're used to.
Is never enough.
Someone who has a goofy social media presence could be laundering $4.5 billion worth of Bitcoin.
Fame, fortune, and fraud.
His stories were so good, they've all fell for them.
I believe in getting justice.
American Greed on CNBC.
Ambition is in my DNA. My grandparents came over from China to give their children a better life. They opened up a laundry in Buffalo, New York. They raised 5 kids, and they sent all 5 children to college. They achieved their American dream, so I can have mine. It's a privilege to be able to have the platform, help viewers out there make better investment choices so that they can have a better life, so they can achieve their American dream. That's what ambition is all about.
Good morning, welcome back to the program. Obviously a really big market day here on CNBC. We're back now with David Roche, the strategist at Quantum Strategy, for more insights on these new Trump tariffs. And David, we were just talking about the overall economic translation. Let's talk about the investor response here as well. What do you think investors can do to position themselves in light of these new tariff policies? Of course, a big question at this point is,
like Europe, and add tariffs to them. And then I think you're going to see economic tariffs, which we've hardly seen yet, coming on to exports to the United States and a lot of other places. So I think that's bad. My prognostication, for what it's worth, is that we will have a bear market in most financial assets in 2025. Because I think the single biggest thing that will fail as a result of these policies, tariff policies, will be U.S. exceptionalism, because everybody is invested in the U.S. being a place apart, faster growth, better performance. Actually, what tariffs will do will be to wipe that out. The fiscal deficits will be bigger, the growth will be lower, the inflation will be higher, and the Fed will ultimately have to reverse course. That's the big message.
so if we see lower growth, higher costs, higher inflation, are there any specific geographies or markets that you think could actually benefit from some of these companies shifting their supply chains in response to these tariffs? Who stands to win here?
Well, the only people who can win is really if the tariff theory of the president is correct, and that as a result of these tariffs, all these factories will move back to the United States. But frankly, I think that is doubtful. And I think the main thing to remember is this, Dan. It is that the biggest boost to global growth in this century, by far, was globalization. And what is happening now is deglobalization in an accelerated form. And deglobalization will substitute a system which is less efficient, less productive, higher inflation, and lower growth. And that, I think, is the bear market. And as it is created in the U.S., it is hard to say that U.S. exceptionalism in terms of growth, etc., will do well. Now, what assets will do well? Well, obviously, IT, which can break the trend, do things which have nothing to do with any of this, like we saw last week. Those sort of things can make money irrespective of what tomfoolery is going on in the world economy. So look for those, keep a lot of cash, buy gold, and be very wary of kind of Trump plays like for example, the US dollar, which must be within 2%, 3% of the top, and very wary of things like cryptocurrencies, which are a pure kind of Trump option.
David, super quickly before I let you go, what's one thing to watch as we track into the European and US Open?
I think the real thing that's you have to watch in Europe are the car producers. That's where you're really going to see the damage. Of course, it'll come in steel and electronics and everything else as well. But clearly, when Trump thinks Europe, he doesn't think croissant and espresso coffee on the Champs-Élysées. He thinks cars, automobiles. And that is where the real damage in Europe is going to come.
Okay, we'll watch it closely. David, always appreciate your insights. Thank you so much for your analysis on this significant market story impacting across assets. That's David Roche of Quantum Strategy. And stay with us here on CNBC. We have more news, more analysis coming your way in just 2 minutes.
Want to make some extra money, but not sure where to start? CNBC Make It will teach you the skills to earn passive income online. Take our new online course that will help jumpstart your business idea. Get expert advice and hear real-life success stories.
Soon, you'll have the tools that you need to start your own passive income business.
Learn how to start generating additional income right now. Register at cnbcmakeit.com/passive income today.
Welcome back. Checking in on the Indian markets and the rupee hovering near record lows now. India releasing its latest budget plans for 2025 at the weekend, which includes $12 billion in tax cuts to boost a slowing economy, along with a slightly smaller budget deficit for the coming fiscal year.
This budget is a force multiplier. Savings will increase, investments will increase, consumption will increase, and growth will also increase rapidly due to this budget.
CNBC TV 18's Latha Venkatesh has a full breakdown in this report.
There are a couple of important takeaways in this budget. The first is that it is shifting focus from a capex-oriented budget or an investment-stimulating budget to a consumption-stimulating budget. Last 3 years, we have seen the government increase its capital spending budget by, 10 to 17% over the past 3 years. The total government investment in capital spending rose from less than 2% 4 years ago to 3.2% of the GDP. But this year, the tune completely changed. The capital spending has been increased by only 10% compared to 17% in last year's budget. On the other hand, the government has announced a lot of tax giveaways. It has sacrificed 1 trillion rupees of taxes it would have collected because it has slashed the rates. So the assumption is that urban consumption, which has been slowing, will now get a fillip because the government is leaving more money in the hands of the middle class. So that's the big takeaway. It's going away from stimulating investment to stimulating consumption in the hope that as consumption is stimulated, more demand will require more capital investment in consumption-oriented units. The second important point in the budget is that it is still very honest to fiscal rectitude. It has brought down the fiscal deficit estimate from 4.9% of the GDP in the current year to 4.4% in FY26. You know, half a percentage point lower, it gets good marks for fiscal rectitude, and it has also promised that in the days to come, there will be a glide path and it will reduce the debt to GDP from the current 56% to 50% in about 4 years. So these are the two big takeaways of the budget. The pedal is now on consumption, not on government's capex. And secondly, fiscal rectitude remains the mainstay of the budget.
For more on all of this, let's go straight to the source. Viyanantha Nageswaran is India's Chief Economic Advisor. He joins me live now. Sir, thank you so much for your time. We appreciate you joining us. Before we unpack this latest budget, I wanted to begin on what we're seeing unfold right now across global markets. As you can see, risk assets in free fall off the back of these latest Trump tariffs. How do you think supply chain dynamics are going to change under Trump's new trade war, and what's the impact for India?
Look, I think the supply chain dynamics have been evolving in the last 8 years or so. Those trends will continue, whether they will accelerate or they will continue the same pace at which they have been reconfiguring themselves is a matter of speculation, and I don't want to get there. So in that sense, this will probably reinforce the trends that are already out there.
So what will India do in response? Is there anything you can do to shield the economy, to protect growth as a result of what is likely going to be an increased trade war under President Trump?
No, I think India's budget unveiled a couple of days ago exactly does that. It takes into account the global economic and political uncertainties, and therefore it does focus on strengthening the domestic demand levers and thereby stoking a supply or investment response, as Lata also put it. The tax cut isn't just a boost to domestic aggregate demand, which of course it is, but more importantly, by creating demand visibility and reducing demand uncertainties, it will also provide an important nudge to the private corporate sector to accelerate its capital spending, and thus be able to offset what Lata put it as a bigger focus on consumption rather than investment demand on the public sector side, which although is not entirely correct, because if you take into account the overall public sector capital expenditure, not just the government of India, but also the public sector enterprises owned by the government of India, and the grants that the government of India is giving to states for capital expenditure, they are treated in the for accounting purposes as revenue expenditure, but they are grants for capital expenditure. If you put them two together, then the growth rate is 19.8 trillion rupees for total capital expenditure in the entire public sector, including grants in aid for capital expenditure, compared to 17 trillion rupees of budgeted expenditure for the current financial year. So there isn't a sacrifice per se, but yes, it is to boost demand and elicit a supply/investment response from the private sector. Back to you.
And as you say, sir, this is a capex to consumption budget. As you mentioned as well, the government, of course, giving big tax breaks to try and boost spending. Massive infrastructure spending, also a key budget focus. But the critics say here that India is missing a chance for deeper reforms, necessary reforms to protect and ensure long-term growth and structural adjustment. Is that the case?
That isn't quite fair, because if you look at the areas of reforms that need to happen, bulk of the reform action in areas like labor, land and buildings, education, health, etc., they're all either in what in India we call the concurrent list, that is joint responsibility of union and state governments, or in some cases they are entirely in the hands of the state governments. That is why in this budget, the government had announced a formation of a high-level deregulation committee to look into various areas of non-financial sector regulation, inspections and compliances, and wants to work with the state governments to build, to dismantle the cumbersome regulatory inspection and compliance framework, making it easier for small and medium enterprises to comply and yet have enough managerial and financial resource bandwidth to concentrate on growing the business, hiring people, etc. So the budget does take into consideration the need to boost the potential growth rate through deeper reforms. And some of the announcements made in the budget, which are dealing with energy security, opening up the atomic energy sector for private sector to participate, etc., they're all definitely deeper reforms. And also in the income tax side, allowing the income tax payers to reopen their returns up to 4 years. So many, and then rationalization of import duties, etc. All these things are indeed reform measures. Back to you.
So also a real prospect that the increase in consumption, these tax cuts could be inflationary. What's the translation in your view for the RBI, and is the government going to be leaning more on the RBI to drive growth?
No, I don't think they are inflationary, because the fiscal deficit is coming down to below 4.5%, which was promised 5 years ago. And right now, there is a certain feeling of demand deficiency in the country, as you can see in the inflation rate, which, if we exclude the volatile food items, is actually running below 4%. So if anything, it is a sign that there is a demand deficiency, and that is what this budget seeks to address, and also in the process trigger a supply response, as I told you. So I don't think this budget is inflationary in nature at all.
You projected 6.3% to 6.8% GDP growth. What gives you the confidence that India can actually hit that target, particularly in line with what we've just spoken about, which is these Trump tariffs and global uncertainty? Is that a real number?
Yeah, I think the projection that we made in the economic survey for growth outlook for FY26 does take into account the global uncertainties. Otherwise, it would have been a higher number. And what this budget does is to give us greater confidence that the final outcome will be towards the larger end of this range, towards the second half of this range, rather than towards the lower end of this range. And that is the confidence that this budget gives us.
So we're out of time. We'll leave it there. I really appreciate your analysis. Thank you so much for coming on today. That's Vinanda Nageswaran. That's India's Chief Economic Advisor. We'll speak again soon. Up next on the program, we're shifting gears over to the oil patch. Downside today for crude. One of the few asset classes that has been seeing gains, though, in the last couple of hours. You can see here WTI up almost 2%, Brent up by around 1%. Our next guest thinks OPEC Plus is now under more pressure from Trump to unwind some of these cuts. We'll get his view on the other side. Stay with us.
To me, ambition is drive. It's the fire in your belly. I didn't go to college right out of high school. I worked full-time while doing school full-time. Somewhere along the way, I got bitten by the journalism bug. No one's going to give you your dreams. You have to roll up your sleeves and work hard to achieve them. Money doesn't make the world go round. Information does. And CNBC is the great economic equalizer because we provide that information so you can make the decisions that are right for you. CNBC is an adventure beyond my wildest dreams.
Want to make some extra money but not sure where to start? CNBC Make It will teach you the skills to earn passive income online. Take our new online course that will help jumpstart your business idea. Get expert advice and hear real-life success stories.
Soon, you'll have the tools that you need to start your own passive income business.
Learn how to start generating additional income right now. Register at cnbcmakeit.com/passive income today.
fragile 6-week ceasefire in Gaza holds, and negotiations for a second phase are expected to begin this week. Netanyahu, of course, facing pressure from the right in his coalition, who are pushing the Israeli premier to continue the war until Hamas has been eliminated. President Trump is pushing hard for an end to the war and sent his own envoy before he swore the oath of office to negotiate a ceasefire in Gaza. The president will also push for an extension of the Abraham Accords and is hoping to oversee Israel's normalization with Saudi Arabia. Let's get you a check on oil prices now reacting to those Trump tariffs. And you can see here, interestingly, ticking higher on supply concerns after the president imposed those tariffs on Canada and Mexico, two of the biggest crude suppliers to the United States. OPEC and its allies are also due to meet later today. They're not expected to shift policy to raise output gradually, despite pressure from the US president to lower prices. Donald Trump calling on OPEC and its de facto leader, Saudi Arabia, to pump more oil during a speech to leaders in Davos, Switzerland last month. Saul Kavonich is head of energy research at MST Marquee. I knew I'd get it out. Great to have you here, Saul. Thanks for joining the conversation. So look, first of all, Canadian oil tariffs of 10%. What's the impact globally and what's the impact for prices?
Well, the reason you've seen this uptick in prices is this actually does portend first a potential logistical disruption very near term. But in particular, the result of these tariffs will see about 1 million barrels a day of supply impacted, about half in Canada and half in Mexico. And what that will do is it will steepen the differential or the discount that the pricing that producers receive in both Canada and Mexico. And that, if these tariffs are sustained in place for a period of not just a few weeks, but potentially months and even years, could start to impact the drilling activity in both of those countries. And so up to about 1 million barrels a day of supply is at risk. And so that's perhaps been the most immediate reaction we've seen from markets. It's important to also just recognise here, though, that there's scope for a broader series of trade wars does weigh on the demand outlook, particularly towards the second half of the year. And OPEC now is a very tricky balancing act to manage all of this all the way through.
Indeed. So let's just quickly touch on what OPEC is going to do in response here. It's unlikely, at least according to analysts that I've been speaking to, that Saudi Arabia will respond directly to Trump's call to try and lower prices by increasing supply. So if we saw OPEC deciding to essentially extend these production cuts as expected, how long is it going to be able to sustain this strategy without losing market share to non-OPEC suppliers?
Well, first of all, something very important to realise is these tariffs actually play directly into the hands of OPEC and give them a stronger hand, because not the disruption to the Canadian and Mexican crude, it happens to also be the heavier sour crudes, which you know, if you're looking for where's the substitute that the United States is going to get for its complex refining processes, it needs to actually get from OPEC plus. And so in a way, this strengthens OPEC hand, but we are seeing this increased pressure from Trump, and there's a lot more pressure than's being publicly acknowledged going on behind the scenes, you know, tying in even to, you know, that meeting with Netanyahu you spoke about earlier, and the link to the Abraham Accords and the security guarantees that can be applied within the Middle East. So we do expect that what we will see here is, you know, combined with the fact that the market's also in quite strong backwardation, right, which also supports OPEC's position, is I think this all makes it almost an inevitability that OPEC will proceed with its planned unwind of cuts from the second quarter, which is an unwind that they've up until now been delaying month on month. And so we will start to see the unwind of those cuts. But to come to the crux of your question, the real issue here is if the demand outlook deteriorates further and OPEC starts unwinding its cuts in the second quarter, it's a question if they can sustain the continued unwinding of those cuts through to the end of the year, or if they're going to start to get cold feet. What I think we will see from OPEC is they will start to release more supply. They will say it was all according to the plan, but in truth, it's going to be because of Trump's pressure. But they're going to try and do this just to cap spikes in prices because of the impact of these tariffs, because of the risk of Iranian crude from sanctions coming off the market. They don't really want to see crude plunge to the $50s or $60 a barrel, which is something that Trump would probably prefer from an economic standpoint. And that's why OPEC is going to say they're keeping to the plan, but they're going to be very hesitant to do anything which is still going to collapse oil prices in the second half of the year.
Indeed, and to apply your same logic, if we saw Trump action against Russia and Iran that could potentially impact and tighten global supply, then that would also leave more space for OPEC to add to the market. So can I ask you as well, just given the new tariffs on China as well, a lot of the 2024 OPEC cuts were, largely a reaction to weaker Chinese demand, as you mentioned. So do you think that remains the primary risk for oil prices in 2025, or has the Trump factor now overtaken it?
No, the fundamentals here are still that supply growth, excluding OPEC's cut unwind, but supply growth from elsewhere is outpacing demand growth for this year. And that oversupply is getting worse and worse from a fundamentals perspective because of the deteriorating demand outlook. Now, what we're seeing, in terms of sanctions for Iran and Russia, help to provide a bit more room there, allow OPEC a little bit of room to unwind those cuts. But still, if OPEC actually goes all the way with their planned cut unwind this year, it's hard to see how the market will not flip into surplus by the end of the year, barring a major global economic recovery, which is becoming all the more unlikely under the possibility of increased tariff wars.
Right. Okay, so much to unpack, so much to watch. So we'll leave it there. Really appreciate the conversation. Thanks again for joining us today.
Thank you.
Stay with us here on CNBC. We are back in 2 minutes.
Good money.
Everything seemed legit until it wasn't.
Good times.
The lavish lifestyle, the houses that they're used to.
Is never enough.
Someone who has a goofy social media presence could be laundering $4.5 billion worth of Bitcoin.
Fame, fortune, and fraud.
His stories were so good, they've all fell for them.
I believe in getting justice.
American Greed on CNBC.
When I did my master's, I was having a concentration in the area of artificial intelligence.
So you're secretly a tech geek.
I wouldn't call myself a geek, but I certainly am very interested in technology.
On the next Managing Asia, an exclusive interview with Singapore Airlines Goh Chun Pong.
I think the most stressful time really during the pandemic was the initial period when we're trying to raise funds.
Looking back, would you have done anything differently? More of my interview on the next Managing Asia.
Welcome back to the program, and recapping our top story, US President Trump's tariffs are due to take effect at 12:01 a.m. Eastern Time on Tuesday, but companies have already been bracing for impact. Here's Lorianne LaRocco with a closer look at what they've done so far.
Preparing for tariffs takes time. Large retailers like Columbia Sportswear started bringing in their product over the summer as a way to mitigate the rising tariffs. Electronics and computers company Lenovo is also a prime example of front-loading. ITS Logistics tells CNBC one of the largest categories being front-loaded are components for infrastructure. Backup power supplies, batteries, and racks for data centers are just some of the items that started to arrive in the summer. The reason? Companies have already been awarded set bids for the projects, and that does not cover increased tariff costs. But not all companies can afford to bring in their product early and store it. Shoe company Deer Stag says if the tariffs are applied, their $50 shoe will jump up to $75. Autos from Mexico and chlorine used to purify the U.S. West Coast drinking water from Canada can also be impacted. For more on how companies in the U.S. have prepared for the tariffs, you can check out the new CNBC digital documentary on YouTube. For CNBC Business News, I'm Lorianne LaRocco.
And we've been tracking the market reaction from these sweeping tariffs all day for you. Let's go out to Singapore now. JP Yong has a live look on what it all means for Southeast Asia. JP.
Yeah, Dan, good morning. And Southeast Asia not immune to the sell-off we're seeing across the region, with two particular markets that might also bear the brunt of possible tariff risks, and that is Vietnam and Thailand. Now, while we see that Thailand itself has a trade surplus actually with the United States of about $36 billion, it's Vietnam that might be more concerning, because for the first 11 months of 2024, Vietnam recorded a whopping $111 billion trade surplus against the United States, which means if the United States takes note of this under the new Trump administration, they actually might be under the crosshairs of possible tariffs if these surpluses are deemed unnecessary or unfair by this Trump administration. Of course, their words, not ours. You're seeing the SET index today down by about 1.9%, and the VNI index also falling by about 0.75%. Out in Indonesia, there are other concerns, especially with inflation for the month of January coming in softer than expected, 0.76% on a year-on-year basis, less than half of what economists surveyed by Reuters were expecting. And this also posing possible deflationary or growth slowdown risks for Southeast Asia's largest economy, which is also one of the reasons why the Jakarta Composite is down by 2.3%. You're seeing the PSEI here outperforming the region, but that's also because the PSEI did see that 4% slump after their GDP print for the fourth quarter last Friday came in softer than expected, and thus prompted a sell-off that pulled it to bear market territory. There are efforts among stock traders in Manila to try and bounce back from that decline, but there is a long way for them to go because they're still well below that 6,000 mark. Just quickly, you take a look at Singapore and Malaysia, and there are other risks. Of course, there is that U.S. probe that is examining the possibility that chips, prohibited chips, have been entering China via back doors in Singapore, and they are now investigating those, and has also led to a bit of a downtrend or a little bit of a dispirited trading nature, that is, for the Straits Times Index and the Bursa Malaysia up in Kuala Lumpur. Dan, it's back to you.
JP, thank you. Also wanted to flag for our viewers what's happening right now with SoftBank shares, and you can see here bucking the broader downtrend in the markets. Right now, shares up 0.8%. Masayoshi-san pushing further into AI as well, agreeing to set up a joint venture with OpenAI CEO Sam Altman aimed at corporate customers. It will spend about $3 billion annually to deploy OpenAI's solutions across its platform. So the stock getting a boost off the back of that. Let's also give you a look at how Europe is set to open the trading day ahead, and absolutely no surprises here. All stocks called to open deep in the red. Take a look at this. Germany's Zetrodax down 588 points as it stands. The Spanish IBEX off by 336. Stocks in Paris down 216, and London's FTSE called down by 118 points, really mirroring what we've been seeing with US equity futures as well, with the Dow called lower by almost 700 points. Thanks so much for your company today. Stay with us here on CNBC. This story is just getting started. We have more market reaction coming up for you with Squawk Europe, which starts right now.
We explore the intersection of innovation, investment, leadership and sustainability in sport.
It's good to try to be sustainable. It's all about technology in the end.
From sailing,
the athletes have to act sustainably at events, and they have to really focus on what are they doing to give back,
to an ancient martial art.
This experience is a new experience. You can think of it as a new discipline.
Because of no physical contact, we can fight regardless of the age or gender.
Or in the next CNBC Converge.
What inventions have transformed humanity?
The wheel, the light bulb, the internet, and me.
Learn how to use AI to be more successful with CNBC Make It's new online course.
It's about how we embrace the technology.
What we're really talking about is automation of tasks.
You're going to feel like they were just always part of your life.
We'll give you examples and how you can use AI tools at work and in life.
Register at cnbcmakeit.com/AI. Special offer ends February 11th.
The age of AI is now.
Geopolitical stability, I think, is good for growth. It's good for peace and stability, and that's ultimately good for business and good for investing. So I think there's enough signs right now that I think give me optimism to what's coming.
Trump gives America a really good chance to revive its animal spirits. There'll be less regulation, there'll be more energy supply, there'll be more of a sense of, markets functioning and regulation diminished. And I think Trump is a shot in the arm for business.
There's a very positive attitude within the new administration towards the biopharmaceutical industry and trying to fix the overall ecosystem. There's obviously areas of disagreement, but I think overall this is actually going to be a better environment for us than the past 4 years. And the biopharma whole sector has sold off and is really at a 10-year low overall. So I think right now we have to rebuild that trust.
But if you want deductibles, forget it. There aren't any. No annual. But if you want deductibles, forget it. There aren't any. No annual maximum either. Plus, you can see any dentist you want. Stop fearing the big bill. Start saving at the dentist. Call now or go to sendinfokit.com.